Good afternoon, everyone. Thank you for being with us. It's a pleasure for me to present this panel on digital strategies. My name is Pavlos Konstas. I'm an associate partner with IBM's enterprise strategy practice in London and leader of enterprise agility for UK and Ireland. This panel is going to talk about the turbulent environment that financial institutions are operating into. These are uncharted waters on market consolidation, changing user needs, regulators on the hunt for stricter regulations, and at the same time, the banks and financial institutions' journey to become digital native firms, to offer digital solutions to their clients, and the challenges that this poses. With me to discuss this topic, I have the pleasure of welcoming Damaso Cebrian, who is the Global CIO of Santander Corporate Investment Bank, Mr. Matthias Gebhardt, who is Chief Innovation and Technology Officer at Swiss Re Asset Management, Mr. Aziz, who is the Chief Transformation Officer of Santander Corporate Investment Bank, and Mr. Stratos Molyviatis, who is the Group COO of the National Bank of Greece. So let me start from the basics, because there are different interpretations of uncertainty. So how do you define uncertainty? In your context, what uncertainty looks like? What are the challenges and opportunities that it poses to global or regional financial institutions in that regard? And I can start with Mr. Cebrian.
Thank you, Pavlos. It's a pleasure to be here. Well, I think there are pretty obvious signals in the market that hit you in the face in relation to the perceived risks that a financial institution might be facing. And it might be related to liquidity, or it might be related to risk. It might be related to cost and productivity of the bank. What I would say in relation to how this impacts our own digital strategies is twofold. On one side, there is a natural tendency from organizations to go back to basics, like, okay, so it's turbulent time, so let's essentially focus on building buffers. Either it's buffers of liquidity or buffers of risk in provisions, or buffers of cost by reducing the spend. But there's also another strategy to cope with uncertainty, which is be much more alert and reactive, and be able to respond more quickly to the challenges that you see on the market. Now, interestingly enough, for creating buffers, actually size helps you in a way, because the more diversified that you are, the bigger size, you can get some economies of scale and some benefits from that. On the fact of you want to react very quickly and be very swiftly on reacting to the challenges, size might be an interesting challenge. And I think that's where the challenges and also the opportunities to continue pursuing a digital agenda lie in. That would be my frame of the opportunities and challenges in these times.
Perfect. Mr. Gebhardt.
Yeah, for me, uncertainty is the norm. So I think you have to deal with uncertainty on a continuous basis, and you have to define your strategies to basically be sustainable over a long period of time, and just face the uncertainty on a continuous basis. And that's what we try to do. We try to balance our system in two ways. One is we try to focus continuously on what we call operational resilience. So we need stability, we need security, we need good architecture, we need good governance in order to deliver, specifically in volatile environments, deliver the information on a daily basis. That's the most important element. Without that element, you will not be able to really innovate and work on really digitizing your business. So that's the other arm, and I call it this two-arm leadership, that you really use your left and your right hand to balance stability and innovation and digitization. So this is kind of from a operating model point of view how we set up. but it's also a people element. So I think also people have to deal, human beings have to deal with uncertainty, speed, which comes through technology advancements, and therefore I also believe in balancing personal resilience and speeding up through agility, through really good, well-organized processes in that matter. And I think that's also quite interesting to balance both elements at the same time.
Perfect. Thank you very much. Mr. Aziz.
So uncertainty takes many, many forms, right? So you talked about things happening in the market and kind of trends that drive the kinds of products and services that you deploy to your customer or try to deliver to your customers. There's actually other kinds of uncertainty which I think are equally as exciting but also scary. So if you're launching a new digital product of any kind, things I'd worry about would be, how will I build it? It is so inherently complex when you're building particularly technology-driven solutions as to how you will build something. There's the dilemma of if I build it, will anyone use it? Which I think is pretty scary at times. And I now work for a large organization where the more money you spend, it's hard to turn around and say, actually, we shouldn't spend any money anymore. So uncertainty kind of manifests itself in many, many different ways. And I think what we're trying to do is build an organization that exploits some of the opportunities that we have to do what we do better, but also to explore new things. But if you're spending millions and years discovering whether it's going to work or not, or how you're going to build it, I think you're going to lose pretty fast. And so experimentation by nature, I think, is really important, either in improving what you do or in exploring new propositions as well. And generally, digital strategy is just like strategy. You come up with really interesting ways to serve customers that you haven't done before. The really hard part is execution, which is infinitely harder, I think, than coming up with a really coherent digital strategy. So I think the execution side and building a system that responds to that change is the key that I think we're trying to focus on at Santander.
Perfect. Mr. Molyviatis.
Well, it's a very abstract question, so I will try to make it a little bit more detailed.
Please.
For me, uncertainty, apart from the geopolitical tensions and all the financial crisis, mini-crisis that we had in the last months, is first of all the potential failure to control distribution channels over new entrants, fintechs, neobanks, etc., big techs. The second is an ever-increasing regulatory burden that creates a non-level playing field between European entities and entities coming from the Americas or Asia. The limited talent pools that reside especially in Europe. And the fourth one is the major disruption that is imminent. It's already happening by AI. So these are some challenges that I have in mind. Now, as in the past, the Holy Grail was to be the first mover, the first one that's going to be launching products, services, partnerships, M&As, etc. And this had become, an obsession. I think that we have lost a little bit the focus on what is needed in order to be resilient in turbulent times. And this is not only to be, innovative, but also to be able to have continuous adaptivity, to be prone to change in business and operational models, and also to be constantly agile. So as you move forward, in order to make this happen, I think that you have to select, as a bank, two different ways. Either you are going to become a pure servicer of banking as a service, staying at the back of the value chain, having low risks and low yields. Either you are going to be a front runner, being, wherever the customer is, integrated in the distribution channels, competing with the fintechs, and having higher risks and higher yields. The first one, I think, is a game that you run the danger to become obsolete. I think that at the end of the day, a pure banking as a service model has incredible running costs that are going to negate the revenues if you don't have anything else to sell. The second, powered by opportunities like, open banking, the embedded finance agenda that we saw earlier on the panel, AI and data monetization give you the ability to compete in the new arena, but necessitate skills, necessitate business relationships, and investment in technology that have to be done promptly, otherwise you are going to lose share. I think this is in a nutshell what I think about it.
Okay.
Pavlos,
Please.
if you wouldn't mind, you hit on a really important point about talent. There is a high uncertainty as to how you're going to get the people to build all these amazing things you want to build. And so you have to build an organization where it's really attractive to come and work, where you'll be allowed to try new things and experiment and work with the latest technologies and solve great business problems, which is difficult. So yeah, the talent war continues.
I couldn't agree more, and I think it's not only a matter of attracting talent, but also retaining and growing talent. And I think that attrition point is really, really important. So I want to pick on a couple of points that you made around exploitation versus exploration being first. So how is this how we deal in that uncertainty with the uncertainties that we described? Can we deep dive a bit into? Is it still the paradigm that we should be first? Is it what are the guiding, let's say, lines that we put in order to execute, let's say, the vision that we have about, you know, the financial institution of the future that potentially links to dealing with these uncertainties and these, let's say, macroeconomic effects? Damaso, let me start with.
Because I was going to build on Stratos' comment. It's true that the financial industry, I think, have been living for a good while on the feeling like, oh my God, we're going to be the next blockbuster. We are the legacy, and someone else is going to come into the industry with a full digital native offering, and we're gonna follow the same fate as blockbuster. And it is true that that feeling, over time, I think it was a good wake-up call for the industry. I think. To a certain extent, it has created an environment in which we became more daring in our ventures out there, and I think that was very positive. It is true that over time, I think we have tamed a bit like, okay, so maybe we have a bit of time to actually build our own strategies and digital strategies. And in the end, that goes back to the point of, okay, exploitation and resilience versus exploration and taking risks and venturing into potential investments that may or may not work, but are worth exploring, because in the end you need to go through the learning process and you need to know, is that going to work or is that not going to work? Again, it's very difficult to articulate it, but it's a balance for every single organization. Every single organization will have to find a way to, in their own governance, promote the ideas that it cannot just be exploitation. Despite the uncertainty in the environment, there has to always be a space of investment and attention from management into, hey, there are topics that we should be exploring and not forgetting. So I think we are probably all going through some sort of rebalancing in a way. I think the key messages, and the one that we see within Santander, is in whatever environment, digital is a trend that is, no matter how many, it's a flow, it's a river that nobody's going to stop. So somehow technology it continues advancing, and in a way, no matter how many stones you put on that river, the water is going to continue flowing. And somehow we need to follow. We need to follow with that. Of course, let's rebalance, let's recalibrate, and let's make the right decisions in terms of risk management and venturing in some areas that we believe are promising. But it's here to stay, and it's going to continue. So no matter what circumstances we live in this year, in the next one, it's going to continue, and we need to be following it. So,
perfect. Thank you. Matthias.
Yeah, I was just thinking of our business. We are an asset manager of an insurance company, so we are really thinking long term. And I think in order to react to uncertainty and to the ever-changing world around us, I think the first step is to define a longer-term strategy, right? Providing a direction for the business unit and for the teams. And then the second step is really to empower the teams to work much quicker within their space, following that direction. So it's really a two-way thinking, giving direction, giving a clear strategy, then letting the teams basically act within their constraints, and also adjusting short-term in more frequent prioritization sessions, which way the company wants to go. And I think if you have that fluidity and you really empower the teams, and we really have good people who have the capabilities to decide by themselves, right? A lot is about decision-making processes, and that slows companies down normally, right? Through complex governance structures and teams that are not empowered, that need to ask for permission to do something. And I think that's for me, working out really well. To really provide a long-term direction, so we have the sustainability in our operating model, but then also give quick inputs into the system to change, and then really have teams that have the ability to change and the empowerment to change.
Just, sorry
please.
that you triggered. So if you measure the lead time to test an idea in an institution like ours, and you realize, look, the minimum amount of time that I need in order to test something is actually 9 months, and the least amount of money that I can spend on this is 1 million euros, you really have a problem, because in the end, the hurdles are going to be so high that you're going to be very, very conservative about what you test. So lowering those barriers is essential for balancing better the exploitation versus exploration. And I think all of us in our own institutions can actually check that. We say, what is the minimum time frame for a minimum viable product? Is it like 9 months because I need to check it out with 1,000 different stakeholders in the company, and actually it's actually pretty expensive because my technical architecture only allows for very, very expensive projects to be run? So that's a big problem. So focusing on lowering those barriers of exploration is absolutely crucial, and we're certainly focusing a lot on that.
Nice. I'm sure, Danish, you can build on this.
The key to uncertainty is fast feedback, right? And we all work for organizations that literally get in our own way of getting fast feedback. So we'll find ways for business people to not talk to engineers, and for them not to talk to designers, and then for them not to talk to customers. And we'll spend ages in meetings planning things that we think will, draw out as we had predicted them. And our budgeting cycles demand certainty for the next 3 years. And our leaders behave in ways that say, well, hang on, we planned it perfectly. Why couldn't you deliver against the plan? So I think the challenge for all of us is building a system that allows fast feedback, whether that's in technology or with customers or from the market. And that's really hard because we are literally, as Damaso said at the start, the larger you get, the more risk averse you get, and the harder it is to actually get fast feedback from the market. So I think that's the guiding principle we try to revolve around at Santander. Damaso and I were in a meeting recently where a very senior banker did look at us and say, well, why does it take a year to discover whether we want to do this or not? Take 2 months, take 2 people, work it out. And that's a great behavior because it inspires us to then go and reshape the system and challenge the status quo, because we often get in our own way.
Okay. And just a quick follow-up on this, because you mentioned something really interesting. Is basically, how is the immune system of a large organization? And Stratos, I would also like your point on this. How does the immune system of a large organization, of a traditional bank, react to this mentality of move fast, move small, and then iterate? And what are perhaps the important elements that need to change? Is it a leadership behavioral change? Is it an overarching development culture? What is it that will fight that immune system?
So I'll very quickly comment, because I'd love to hear Stratos' view on it. But an immune system is there for a reason, right? So the systems that we work in are beautiful organizations that have evolved the way they have for good reason, and they've been very successful in doing so. So to criticize that system is wrong. To evolve that system is the right way to think about it. So I don't think there's an immune system or immune system shouldn't be seen as a bad thing. It's just the system behaving how it's been trained to behave. So we now have to find ways to nudge it and move it and tweak it, and that's what drives behavior change in the long term and transformation. Stratos, I don't know what you think.
Please.
Well, to be practical again, we are 200 years old partner, so it's a legacy issue out there that we have to confront, and we confront it by having a very strong transformation program that managed to tackle the majority of long-standing issues. So we have heavily invested in our digital infrastructure. We have addressed many of the key processes and mission-critical systems like our new core banking system, which is a very huge and complex program. We have tried to be outside of the NBG world, to build relationships, to reshape our distribution channels with our open banking offering. And of course, we still have legacy processes that we want to tackle, but they are in the picture and they are measured as they change very rigorously. And I think that the key element here is the leadership that you are going to have. So we had an endorsement both from our CEO and our board in order to proceed with that change. We were funded, a very important thing. And we always press ourselves to become better. Now, if you want to have a vision of becoming an adaptive bank, you have to be open for the years to come. You have to be lean. You have to eliminate all the internal red tape and hide the regulatory burden from your customers. You have to be digital from head to toes, not only in your digital front end, but also in every other aspect that is affecting the value chain. Because when we say digital, usually we mean web banking and open banking, and then you have legacy applications of the bank, doing their own thing. You have to exploit your data. Your data is your asset. It's your true IP. Everything else should be commoditized. Nurture your talent or acquire the talent that you miss. And have an open eye and ears about developments like the artificial intelligence one. So the vehicle for us was transformation program. The key element was leadership, and of course, to be practical, was also the funds, the budget.
Okay. I want to build on your point around data exploitation, data analysis, basically, and making use of customer data, because financial institutions have a ton of it, but perhaps they don't know how to penetrate it or link them to product positioning. And how this changing, because you talked about Damaso about technology ever evolving.
Yep.
We see that change in the dynamics that different players, for example, Apple and Goldman Sachs announced last week that they're launching current accounts. So the element of data penetration becomes ever more prevalent, because it's not only banking data that you can penetrate, it's usage data of consumable products that people use every day, every minute of their lives. So how does these implications compare with, obviously I want to address the elephant in the room, generative AI and all of this discussion that's taking place about how it's going to replace processing, replace coding, replace decision making, basically replace everything. So what's behind this? How does this address perhaps the strategies of tomorrow?
Yeah. I think so. Every financial institution in the world would have already realized by now that data is a core asset of that organization, and that there is a significant amount of value to be unlocked by using the data that we hold to better serve our customers. And every financial institution would have already understood how difficult that is, and we would be on a certain part of the journey of either equipping ourselves with the right technology to do it, or finding out the challenges around data quality and the capacity to integrate massive volumes of data, especially on financial institutions that have grown out of acquisitions, typically with a very fragmented architecture here and there, and where bundling data to make it usable and exploitable and analyzable, it's actually a big challenge. So I think we're all going through that journey. obviously, Gen AI, which is right now everyone, we would all be talking about that. It's April 2023, so that's it's the topic. I gotta say, I have absolutely no clue, and it's one of those technologies that when you look at it, you feel like it's blurry. How is the future gonna look like in the actual implementation of this technology? And we've been playing with AI for a long while, but it's true that it's becoming mainstream, and you're starting to feel this is actually pretty impactful. My own function, without getting beyond that, is like, do I need developers anymore, or do I just gonna be using this product to actually generate code? That's it. So how's that gonna work? I don't know. So I think we are at too early stages to understand. But then we come back to that: how equipped are we to test, to learn, and to adapt as quickly as possible? Because in the end, it's going to be survival of the fittest, and the fittest are the ones that react more quickly to what the opportunities and threats that changes so significant as potentially Gen AI would be. So I think back to I have no clue what the future would look like, but I'm surely going to make a lot of effort in being as reactive as possible and learn as fast as we can from it.
Awesome. Matthias?
So I've been around in this industry for a few years, right? And we started, I think, 2008 already with a data governance program around our structured data. And we learned a lot, right? Really good architecture, really good governed process, really looking out for our data to really generate good information for our decision-making processes. So I feel now, being in the AI world, obviously different kind of unstructured data available. It's not too far off from where we started in 2008, right? It's still a lot about governing data, looking for, certain governance process steps to really look beyond the results, right? There's a lot of risk for us as a highly regulated company. We really have to make sure that our reputation risk is not explored through data copying rights and so forth. So I think we have to deal with a different technology, and yet the things we learned from the past are still applicable to today. And I think being agile in a way and adopting to these new technologies is helping us to exploit that much further. And we've been experimenting with that now for many years. And the good thing is there are a lot of other companies out there which experiment with AI and offer already services, right? So you don't need to build everything yourself. You can really look into your partnerships with Bloomberg, with Microsoft, and really exploit what they offer you. So I think that's also a luxury that a company like us have. Yeah.
Perfect. Danish?
I'm tremendously excited by the potential. A bit like Damaso, I'm not entirely sure how we're going to do it. But if you think about the B2B world versus the B2C world, generally the B2B world follows what the B2C world is doing. So the work environment of today, the experiences, the way you interact with systems, with digital experiences, is pretty much a digital native experience. You know, chatbots, messengers, high levels of automation, great user experience. I think what we do, particularly in the B2B space, has been immune from that for quite a long time because of relationship, high barriers to entry, big balance sheets, etc. But we're also sitting on tremendous data assets. So I think we can train, generative AI models to do some pretty cool things. But how we're going to do it, where we're going to start, I guess we'll have to look at the experiment portfolio and make some bets. But I'm tremendously excited because I can see a world where, based on the potential of the technology, you can deliver some amazing experiences through highly complex transactions, at least support humans in doing that better and offer higher levels of service and quality and speed. So I think it's just a tremendous opportunity. How we get there, I guess we'll see.
Let's see, Strato?
Well, first of all, we already use, I think, in all financial institutions, discriminative AI in anti-fraud, AML, in contact centers, everywhere. Now, how we're going to embed the Gen AI in our everyday journeys, it's yet something to be explored, but somebody is going to do it, for sure. And this is going to be a major disruption. It's going to happen in the next years, and it's going to disrupt tremendously the whole value chain of financial services, in credit risk, in underwriting, in infrastructure management, software development, in the contact centers, literally everything. And to be honest, some of the basic fundamental operating models that systemic banks are using are going to be overturned, and positions are going to be lost. Some others are going to be generated, but positions are going to be lost. So there is another aspect of the AI implementation. So Gen AI poses both a threat and an opportunity for banks, especially the systemic banks that hold large data sets. But we have to remember that somebody else is holding even bigger data sets than us, which is the big techs. So if they decide to aggressively move into financial services, and they are permitted by the regulator to do so, which is highly unlikely, but it may happen, we are going to be in big trouble, because they have sophisticated AI engines, they had huge data lakes, and they know the daily activity of the customers much better than we do. So we have to be fast in that case to understand which are the journeys that we have to focus and embed Gen AI quickly, and how we are going to protect our assets.
Perfect, thank you. So I hold this as our hypothesis to be validated. I think we can, we can be here next year and look back to what we said a year ago and whether it holds true. So with that, I would like to thank you for discussing the topic with us, and thank you, everybody. And I'm sure that we will have very interesting discussions in the next panels as well. Thank you very much.
Thanks, Pavlos.